What am I even streaming to? Let's see if I go to... Oh wow, this is live? Oh shit, there's like a 1 minute delay. Oh wow, this is live? Oh shit, there's like a 1 minute delay. Oh wow, this is live? Oh shit, there's like a 1 minute delay. Oh wow, this is live? Okay, now why is it saying the same thing over and over again? Alright, let's do something different. Alright, oh shit, it's a 1 minute delay. Let me exit out of here. Oh wow, this is same thing over and over again. Alright, let's see. Alright, let's get to business. Alright, let's see. Let's get out of here. And let's do... So I need this. I need to look at this. Damn, I need like a big screen now. Actually, I could do this. And this screen. Move this to the left. Alright, cool. Now I have both. Now, one thing I would like to do is to have... Alright, cool. I could have that right there, but also right here. Alright, lit. So this is... I wish I could cut this to where I actually start. I think that's why... that's why people hit the stream when they're actually ready to stream. But let's... I haven't used that channel in a while. Commitment to traders. This is interesting. More asset managers are going short. Oop. Let's take down this. Now, this is what I found interesting. More dealers, for the first time in a long time, they added so many long positions, which means they think the price is gonna go lower, and they remove short positions. As you can see from previously, well actually, if we go here, we could get a better look. I mean, it's not side by side, but here, let's just go from April. Yeah, let's start here. All right, for March. For March, we see that dealers have added shorts, so 37,000 shorts added, and then here another 20,000 shorts added on March 31st, or should I say on March 25, 21,900 shorts added. Then here in April 22, 9,600 shorts added, And then here on, why do I have two? Oh, this one's old. So April 29, 6,000 shorts added. And going on to May, 4,000 shorts added. As you can see, the amount of shorts has been adding, but has been decreasing at a decreasing rate. As you can see from the beginning of from February, this thing just started going up, and then started like, you see that hiccup, came down, and then from here for the last 3 months has been just kind of gradually just going sideways. So shorts are added, but not by a large amount. And then again on May 13, 8,000 shorts added, but then also we see that there has been long positions that are added as well. And then now going on to this week. This week we see a huge difference in positions. We see 2,000 shorts taken away and 12,980 shorts added. So now we can see that the dealers have started to at least change positions. We don't know how long this is going to go on for, but we do know that if we go to the price, if we go to the daily chart, we have seen that ever since the dealers have been adding short positions, the euro has been going up. So as you can see from right here, from February 28th, so let's see, from February 28th all the way to, let's do this. Let's just start from this green bar. From February, let's start from this red bar because it's February. From February 28th and all the way up to basically April 21st, prices just been going up and up and up and up. And right here between the last basically 3 weeks, 3 to 4 weeks, we've been seeing that price has been kind of going down. But down is normal, especially after a big rally like this. Down is normal because price needs to come down, and I don't know. Things can go up forever. It's like this thing in physics. What comes up must come down. So I think we're at that point where things are starting to come down, and one of the things I can confirm, because usually you would just say, oh, this is just a hiccup. It's just a retracement in the market, and it's going to go back higher. But the fact that we see a difference in dealer positioning, and dealers, they don't think about tomorrow. They think a little bit longer term than we do, and so when they start to change positions, then I don't know. We should kind of listen to that and listen to their insights. But I mean, because look how right they got this at. Like they started shorting positions from all the way up here, from down here all the way to up here. It's like, oh, I don't know, man. They pretty much nailed it. They made a lot of money or protected themselves from losing a lot of money. So here we are. So there's 1,200 pips right there. And then this drawdown, we can see that it went down near almost 500 pips. And just starting this week, which is basically this the retracement, that's when they started to add more longs and remove shorts, which could mean that we could start seeing a move where it just starts to kind of eat back all the gains. But that is a longer time frame view. We don't trade longer time frame views. I mean, maybe you do, but I do not. Sorry, let me drink my protein shake. I'm really sorry because you hear me eat ice. That's good. I went to the gym in the morning. I started taking this pre-workout. This shit got me geeked. Yeah, I'm starting to do PRs like every day now. Sucks that you need pre-workout to perform, but I mean, shit. People take steroids. I take pre-workout. It's not that bad. So, I guess what am I trying to say here in the long position? Long position, long term, we've been going up for a while now. and I think it's time to think about the next move in the market. I mean, I know right now I just mentioned the dealers and their positioning, and that's just one of it. Um, there's some macro things going on as well with the Fed and the interest rates. Supposedly they're going to cut rates anytime soon, and if they cut rates, then actually, huh? If they cut rates, the Fed cuts rates, then they should actually go higher, or or sometimes in the market there's always an up move in anticipation of rate cuts, and there's always an up move or a move in general in anticipation of an event. So, because like actually from damn near almost March, we were thinking about having rate cuts this month and this month and this month, and I know it's only been 2 months or 3 months or 1 month, but maybe this up move was in anticipation of rate cuts, and then now that rate cuts might actually start coming, then the market is kind of just is already exhausted of that anticipation. Now it's just realization. Because if you look at a SOFR, I mean, look at this. It was back at the beginning of April when this is when we really thought there was gonna be rate cuts, and we are already pricing in like 100 basis points in rate cuts, maybe 75 or let's just go. Yeah, because if it's 70, 97, hold up, if it's 97, the fuck does that mean again? Oh, at 97, that's a 3%, 3%, having rates at 3%. And right now rates are at 4.25 or 4.5. So that is, damn, that's 125 basis points in rate cuts, which got priced in basically one day. And let's see, when was this day? This was April 7. April 7. Huh. Nothing interesting really happened that day. Oh, you know what? Because as rate cuts go up. No, wait, hold up. This as rate cuts go up, this actually should follow it. Here, let's go side by side. It's 15 minutes a daily, so let's do. Yeah. Alright, so. Yeah, so you can see. Oh, by the way, this is the SOFR futures contract. SOFR's 3 month. This is the December 2025 contract. So this is basically saying that basically this is pricing in the interest rate cuts for December 2025. So right now we're saying that, oh shit, are we pricing in no rate cuts or maybe just one? Because this is 96 145. Let's see what. Damn, if I could type, what is the. Oh shit, no, no, no. Oh, let's just say 4.25. 4.25, and then this calculator, not this calculator, this thing is saying. So the SOFR contract for December 2025 is pricing interest rates for the end of the year. So if this is 96.145 minus 1. Wait, what? Oops. Let's go back. minus 100. So this is pricing in So this is pricing in having interest rates at 3.85%, and usually interest rates are only moving up and down by 25 basis points. So 385, that's either going to be 375 or 400. And if right now interest rates are 4.25, so let's do 4.25, then right now we're pricing in 39 or 40 basis points of interest rate cuts. So basically 50 if we were to round up between 25 and 50, and this means that this basically means that there is going to be right now it's pricing in 2 interest rate cuts for 2025, or 1 if it's a 50 basis cut, but that's unlikely. I doubt they're going to move that fast. So this is a 50 base cut, so 2 rate cuts by the end of this year. Now, when are these cuts going to happen? I don't know. It could be today, actually. Hold up. We have... Yeah, look at this. We have a Fed meeting. But this is a meeting, though. This is not really... they're not making a decision. Why is there... why is this a high event? I mean, they just meet together, drink tea or coffee, and just talk about stuff. But I guess, you know what? Let's see. Alright, so there's this detailed record of the FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So is this about, like, them setting interest rates from... So there's a meeting of why they chose the interest rates that they already chose? I don't know. But it's at 11, and we don't trade at 11, so let's... So the only thing we can do is just anticipate for what's going to happen. Alright, so that's basically what's going on. Shit, what did I even get to talk about? Yeah, so basically we're pricing in 2 rate cuts by the end of this year, which means that... Technically, this means that they should go higher, but let's see what the DXY is doing. DXY. Oh, and then look at this. This is just an interesting thing. At some point over here, the crypto market should be hitting all-time highs. Because look, consolidation, liquidity sweep, back down, sweeps up, buy side liquidity, and this is crypto top. Then right here, consolidation, liquidity sweep, and then comes down to buy side liquidity, and this is a 2021 crypto top. And here we go. So this is 2017 crypto rally, this is 2021 crypto rally. Then here we have consolidation, liquidity sweep, back to buy side liquidity, and this is going to be a 2025-2026 crypto top. I'm not sure when it's going to happen. I don't know if it's going to happen by the end of this year or beginning of next year. So here we go. 2025 to 2026 crypto top. And how am I positioned? I'm not positioned that well, actually. I mainly just have Bitcoin and ETH and some alts, but I don't know. I don't really trust alts right now. Alts are pretty fishy. At least they've been performing not so good, so I don't know. Suddenly they perform not so good, and suddenly they perform amazing. It's just, I don't know. It's becoming a little bit too, I don't know. It's a little extreme, too little bipolar. One side either bad or really good. I should be on them. But oh my god, I'm getting distracted. All right. So let's just go back to our charts. I do want to show you this trade that I took. Let's do, what am I doing usually? I usually do this one. Alright, I usually have this 15 minutes. I usually have this at 4 hours, and I have this one at 1 hour. So let's start from there. And every night before I go to bed, I always go on the 1 hour chart, and I'm like, I just kind of map out what I think price is going to do overnight. And this is what I mapped out. And honestly, it's I got the idea right. I got the idea that it's gonna come down a little bit lower. Because when did I do this? I did this at man, nah, I could do math, but let's just do this. All right, so I drew this on like 9, so that would be right here. So on this red candle, let's go back to New York. So on this red candle, so I drew out that we're gonna have it's just gonna come lower down to the week open of May 5th. So there's that, and then after that touch to the week open, I thought I was gonna come back up and do a little retracement back to this liquidity zone right here, which I drew it out so that it's only gonna barely hit the bottom of this little consolidation right here, but as you can see, it kind of came in a little bit higher, more than I thought. So honestly, if I were to just move this up right here, bam, like look at this. I mapped it out just about perfectly. I just thought, I was gonna not go so high. So overall, I give myself a B on that. And if I just priced it correctly, if I just even had a conservative little position of like it being right here at the bottom, or maybe I could have gone enter inside this fair value gap right here and had my stop on top. I mean, that's nothing really. I probably wouldn't have put that on. But yeah, so it's just doing its thing. But now, the thing is, like, now that it's done its thing, now that I kind of mapped out what's going to be doing from overnight to the morning, now how does that affect us? Because, at least I need to stop saying we, because, you do you, I do me. So I usually trade on the 15-minute, or technically I trade on, I don't know, I say I trade on the 15-minute, but it's kind of like I trade on the 5 minutes, on a 5-minute chart, which just honestly because I feel like I get a little impatient and I just need to put on a trade every single day, and the 5 minutes offers that, as the 15 minutes does not. But in reality, I should be trading on the 15 minutes, which means I'll have like between like 1 and 2 trades a week. So I just kind of need to start looking for those 1 and 2 trades a week. All right, let's see what we're doing. Here, let me just draw some stuff, just to give myself a little idea of where we are right now. It's 6:01. Oh yeah, I did want to show you this trade I did yesterday. Yeah, let's do it. It was this one. Yeah. Okay. Let me show you the trade I did yesterday. Just because I feel like I need to talk about it. I just need to get off my chest. I'm looking at the live stream right now, and it's like the audio is not that good, is it? I mean, the screen is not that good. Is it always like that, or? Oops. Is the quality always like that? I guess if you want, you could. But one thing that I am seeing is that. Oh, yeah, because if I go here, if I make this live stream, yep, there we go. Okay, so it is full screen, but it's just that on my I have a widescreen TV or widescreen monitor, and that's why it kind of shows up kind of weird. But on a normal screen, it should show up all right. Okay. I'll get to reviewing my trade in a minute. I just need to. I just need to take a breather real quick.
Numerically, the greatest male seducer ever.
Nope, I'm not watching YouTube. Come on. Here, let's do. Okay. I'll get to reviewing my trade in a minute. I just need to take a breather real quick.
Numerically, the greatest male seducer.
Nope, I'm not watching YouTube. Come on. Here, let's do. I'll get to review my trade. I just need to take a breather real quick.
Numerically, the greatest male seducer.
Nope, I'm not watching YouTube. Come on. Oh, I see what's going on. The microphone picks up the audio that I already played and it's just replaying the audio and replaying the audio, replaying the audio. Okay, so I see. Oh, I see what's going on. The microphone picks up the audio that I already played and it's just replaying the audio and replaying the audio, replaying the audio. Okay, so I see. Let's see, is there any see, now this is why I stream, because that way if I don't stream, I get distracted. If I get distracted, then there's no reason to kind of oh shit, let me say happy birthday to my friend real quick. I know I'm just taking up your time at this point. Let's go to all right. I was gonna do something real quick. I guess I am reviewing my trade here. Let's remove. Let's review. Then that's fine. Let me. All right. So this is what I did yesterday. Yeah, I'm gonna just kind of I'm gonna walk you through it over here. But yesterday, whenever I take trades, I usually kind of just I did mark down like my weekly analysis. So I write down the dealers, see what's going on with the dealers, see what position, how to position it for the week, and then I also just take a screenshot of the forex calendar so I could see the main events that are happening this week as well, just to be a little prepared for that. Oops, I think this is supposed to be on my other notes, but and then here here I place a trade. Here I have my thesis of why I think this trade is the way it is, or why, yeah. So I'm basically just going to be reading off these notes, but also kind of just going off the dome from memory, and also maybe a little bit more information since I'm actually just thinking about it and not writing it down. Alright, so let's see, let's just mark off where we start off the day. Alright, so I wake up. So I wake up and price is right. So where is price? Price is. Let me go back to my notes. All right. All right. So let's start off with the 1 hour chart because this way I can here look at this trade that I didn't take. All right. Let me get my drawing thing out. Let me get my brush. Alright, so here we see we have one high, comes down, we have one low, it comes down to this this block of orders right here. And then we have this other high, so this other high basically sweeps liquidity that's up here, and then it retraces, comes back to this block right here, bam bam bam, takes up liquidity, and then moves higher. So there you go, new high, sweeps up this liquidity, and then from there it comes lower, see, lower, and then comes back up to this zone, sweeps up this liquidity, comes back higher. Oh shit, what's this? You see this block of liquidity? It hits that right there, but just that's it. It just kind of taps it, opens the door, but doesn't really go in. Basically what I'm saying is that it didn't go over this liquidity. It's starting to show weakness. But you know, sometimes that happens, and sometimes it's sometimes that happens. It just comes lower and just to pick up more liquidity and just come back higher. But this time it's a little different. Let's see what's different about this. Let's see. Let's try to erase what I drew. What's different is, one thing that's different is this move right here. That's like the same thing. Let me change the color. Can I change the color? Can I do that? Let's make this red. It's not that it's bad. Damn, I reversed it back to green. Okay. Shit. Alright. Fuck. Alright. Fuck. Sorry. Okay, there we go. Let me change this to red. Alright. So what's different is these two bars right here. This one and this one. Because you see we have price kind of gradually coming up. As it gradually comes up, it is kind of eating away this liquidity right here. And then as it kind of passes through this liquidity, it just kind of pops up like a rocket ship. So that's my rocket ship right there, and just kind of pops up like a rocket ship. And then from there, it just kind of stagnates. It has one more liquidity sweep just up here, and then from there, it just starts coming down. It doesn't just come down like hey, let me like rest real quick. It's like it's coming down as like it's like retreat. See this candle right here? It just kind of retreats and then comes back. Basically, it comes down to basically the, what do you call this? The point of release. That's what I forgot his name. That's what someone calls it. Wherever the candle starts to pop up, basically. So you know how I said this is a rocket ship? Let me draw a rocket ship. These two candles are a rocket ship. So for a rocket ship to launch, it needs a launch pad. So that's what basically this is. And this is what you call the point of release. Or POI. No. POR. Point of release. And as it comes down here, as you can see, comes back up, lower low, and then right here breaks even lower and makes a lower high. Okay, so basically on a 1 hour chart, I'm saying that we have a price run, and price runs are usually kind of even though it's a run, it's looking an exhaustion move because it's like it's like it's like sucking in the last little life out of a run. You know, it might look like a run, and you know people are like, "Yo, it's running, it's running. Let me hop in, let me hop in." But you know that's the whole point is it makes it look like a run, which makes liquidity pile in, but only for it to reverse. All right. So basically, we have a price run right here. So this is one indication of why. Well, I guess you could say it also got liquidity from here, because as soon as it broke this consolidation little zone, there's a bunch of orders sitting up here, and they just kind of ate it all up. So yeah, that's one thing to consider. But let's go back to the 15-minute. Okay, let me go here. All right. All right. So here's what I was talking about. Price run, new high, but then here we have a low, and then we see we have a lower high. So lower high is one indication, but you know one lower low, one lower high after long bull run, that doesn't really mean much. But then here we have an interesting little thing. This is basically what I saw yesterday. Is we have the lower high, and it broke down. So it broke lower than this lower low. So now it made a lower low. So it made lower high, lower low, and then as that came up, as that came down, it swept back higher. Basically, came down to this point of release right here where it broke a structure. So this is a block, and then right here, this is a break of structure, and retrace back here. So basically, it's saying that hey, I left you, but let me just say my last goodbye. And as you can see, this is the lower high. So now we have a lower high, lower low, lower high, and from there it just came crashing down. So just came down, and right here we had the support right here, but this, as you can see, price reacted a little bit, had that little one green candle, and so it just kind of broke a structure and continued going lower. So as you can see, we have strength on the downside. So now we have this lower low, and so as price is coming higher, I marked out that as price is going, so we were like right here in the morning, and as I mapped it out, basically one thing that we can see here is that these are skinny moves, right? High volatility in short time frames, so these are skinny moves. And usually with skinny moves, they're pretty, let's see, what can you say? They're pretty easy to run back up on or reverse on them. So these are high liquidity, but like very much gappy. I'm just making stuff up now. But basically, I'm saying that these are lubed up. That's what I used to say. These are lubed up. Why are they lubed up? Because they're easy to climb up on. There's no friction. So as it climbs up, I drew out this box, just in order block. So, and also we have this fair value gap right here. So I'm saying that like, okay, so basically it's showing me that it wants to go lower. I have a retracement back to this order block, and so that's when I'm like, okay, so my position now, or my thesis that it's gonna go lower, so let me go short. Now where am I gonna go short? I put my short position right here at the basically the beginning of the fair value gap on this big red candle, and I put my stop loss on top of it like that. And usually I would be going for a 3-to-1 return ratio, so usually my stop would have been right here. Bam. Alright, so this is the trade that I put on. But just like basically every other day in my life, I find a way to fuck things up. So this is what happened. And let me just read off my thesis from what I have written down from yesterday. So here I have. My thesis here is that I completely disregard. I'll get to that. So my thesis here is that I completely disregarded my rules. Firstly, I am trading against the main trend. When the main trend is coming back from retracement from equilibrium, creating a strong base ready to continue going higher. I can say that I had reasons for getting in, like I mentioned in the photo above, which is basically what I just mentioned right here, is that we had this one, this is a, high volatility, short time frame. I call this a skinny leg, or Chris FX calls it a skinny leg. I stole his stuff. So this skinny leg and the skinny leg got filled. So basically it got lubed up, retraced back higher. And from here we have a break of structure. So it's kind of already showing that it wants to continue lower and the buyers are out of town. So continues higher, bam. So this gets filled in and it comes lower like this. So basically we could see this as just, this move right here is just a distraction. And then so we have another break of structure right here, skinny leg, and then so now it's going to come up and fill it up. So that's what I'm saying right here, that it's going to come up, fill it up, but it has weakness. The buyers are out of town to kind of have enough strength to break through it. So that's my thesis, that like I was going to come up and then just continue going down. So so basically I'm trading a change of market structure, aka reversal, which is something I do not usually do. Yep, that is true. This is kind of a reversal trade, because this is, like, even though yes we have one lower high, one lower low, it is still a short and an overall just a basic really long trend up ever since basically the beginning of May. So for like 2 weeks we've been kind of going higher, and so like me trying to catch this short is a trade against the trend. Okay, so place my sell order after prices consolidated lower, moved higher to initial break of structure, as I think that would be resistance. Yep. Okay, so what happened? This trade, in hindsight, looks like a winner, right? Well, I started going into the 5 minutes. Yep. I started going to the 5 minute, and as you can see, I entered around. Yeah, I entered around here. Let me just move this out the way. So I entered around here. And price started going lower, like kind of like in my direction where I wanted to. And let's see, let me make sure I have this right. This should be all the way up. So this, yeah. I technically entered on, let me get this right, 13717. Damn, that entry here, that's actually really good. Oh yeah, because, my bad. Yeah, because I entered on this fair value gap open, so right there, and I had this up here. Okay, so let's go back. Alright, so this is my real entry. Bam. Okay, so this is when I got in the trade. And so once I got in the trade, I kind of just zoomed in to 5 minutes and started paying a little bit more attention to the little details that don't really matter, but here we are. So got in at this fair value gap entrance, and then price started coming down my direction. So the first 5 minutes, I'm like, damn, I'm really smart. This is a really good thing. So it started coming down, came up, and then started coming down again. I'm like, okay, so I just started marking things out, and so we have this little high volume price run right here, but then we have this little trade. So I had this marked up, and I was like, damn, okay, so it came down to the lower channel, came down to the lower channel, came down to the lower channel, and lower channel once again. And I told myself, damn, okay, so if price cannot break down this lower channel, then I am basically screwed. Price does not want to continue going lower, it's going to continue going higher. And I have a problem with losing money. Yeah, I need to work on it. I saw price tested the lower bound channel, and then as soon as this kind of started going up, I took my stop. I reduced my stop because I entered right here, and as price was going down here, I'm like, okay, you know what? If stop continues going, if the price goes higher than my entry price, then I'm a little bit higher than my entry price, and I'm out. And so that's what basically happened. I lowered my stop. Price rejected these lower bound channels, and as it continued going higher, I started losing faith in the position. And basically, what stopped me out was kind of this red candle right here. So I got stopped out right here, and literally the next candle continues lower, breaks the lower channel as I wish what happened right here, broke the lower channel, and just continued going lower. So yeah, I missed all this. If I would have just kept my stop around up here, I would have been completely fine, and I could have, if I was good, I would have been able to chase these. I would have been able to chase these wins all the way down to a 6R, but I mean that's an imperfect scenario. But like in this case, at least a 3R would have been cool. But like I said, I reduced my stop super low. I don't know why I did this. And like I gave myself a 3 pip stop loss. That's not so smart. If anything, I would have done right here, like on top of this candle, because it's on top of this liquidity block. So right here would have been cool. Or even, where I initially entered it on the top of the 15-minute candle, this one would have been cool as well, but I lowered it to 3 pips, and this would fuck me up, and I got stopped out. And then, so now I lost like a couple money, and then didn't gain any money from down here. So that's what happened. That's my trade from yesterday. So yeah, I moved my stop in way too early, and this trade would have made. I mean, I only place right now. I only place maybe like 11. I only risk $11 per trade. That's 1/4% of my account. Yeah, like I said, I don't know. I've been trading really low because I don't. Yeah, I'm not there yet. So I've been trading really low on my account. I mean, which is actually a good thing because ever since I started I think I started in February or March, I've literally had maybe like six losses in a row. So 6 losses at 2% of my account. I mean, that would have been. That wouldn't actually been that much. But the thing is, like, I mean, that technically would have been 12%. And if right now my account. Here, let me get my calculator. So 12%. What is that times 0.12? $540. I mean, shit, $540. That's kind of a lot. Yeah, 12%. 540. The thing is, like, I could lose it. It's not all my money, but like coming back from that would be a bitch. That'd be a lot of work. It's not right. I just lose $100 and fucking $500. So that's why I've been doing only 1/4% of my account per trade, and so I get a little comfortable, and then from there I'm gonna go back to my ideal positioning, which would be 2%. So right now my plan is to do. Let's write this down. So today is. So my ideal position would be risk 2% per trade. And then continue risking 2% until I hit a loss. So once I lose a trade, go down to let's go down to 0.5%. And then so basically if I lose a trade, so once I lose a trade, and since I'm already doing 2%, so once I lose a 2% trade, for my next trade is going to go down to 0.5 to trade. And once I win a 0.5% trade, move up to 2%. And then stay at 2% until I lose another trade and go back to 0.5% until I win a trade and continue the cycle. So I'm not sure when this is going to happen because right now I don't feel too good about where I'm at in terms of my positioning, but ideally I would want to risk 2% of the account and just continue doing 2% until I hit a lose, until I lose a 2% trade and go back to 0.5% just to gain confidence, just to gain that momentum back. And once I win, I move back up to 2% and then continue at 2% until I lose again, go back to 0.5 and just kind of continue that cycle. So, yeah. Damn, I didn't even do a trade this week. I didn't even think about trades. I just been kind of talking about my ass. So let's do this. Where are we at? Here, let me just go back to where I was. 1 hour, 4 hour, 15. And also one reason why I'm not really, this so overnight price moved higher and retraced lower, continuing the 4 hour trend. Oh yeah, now that I'm here, so yesterday I wrote down that let's see, what did I say exactly? I said that my thesis here is that I completely disregarded my rules. Firstly, I am trading against the main trend. So what I'm saying here is I usually only trade when the 4 hour is either long or bearish, and easily I just kind of tell by these moving averages, which is not, which is being okay, but I don't really know if it's okay or not because I haven't really tested it. So that's one thing I'm planning on doing at some point. Is I want to test these moving averages because right now I have the EMA 10 and I have the SMA 20. So the SMA 20 is a little bit slower to react. The EMA 10 is a little bit faster, but I just found that the EMA mixed with the SMA gives me better signals than if they were both EMAs or both SMAs. So basically that's my thesis right there. But yesterday when I entered the trade, which one is that? The EMA was on top of the SMA, or the 10 was on top of the 20, which is saying that the trend is long and I am entering it short. So then right there, that's why I said that I'm going against the trade, against the trend. But I think last night or this morning I was looking at it again, and I could see that even though it was against the trend, the EMA would the 10 was sloping down. So like if it was like sloping up like this, and I try to catch this, if I try to go short here, then yeah, that'd be freaking not the smartest thing to do. But since I already had this lower high, lower low, and like basically what I just mentioned earlier, then I entered a short right here, and that's against the trend because the 10 is above, so technically I should be going long, but it's downward sloping, so maybe it was okay, but either ways, it's not something, if you have a rule, then you shouldn't go against it. And like now, the 10 is above the 10, the 20 is above the 10, so right now it's showing me bearish signal, so right now it's telling me to go short. So right now I'm looking for a short, but again, I only go short when I see retracement back to a liquidity zone, and then I break a structure. And right now I am not. Right now I am not. I'm not looking for a short because oh, there's no retracement. So that's what I'm kind of writing down here, is that overnight price moved higher and retraced lower, continuing the 4-hour trend. Currently in a channel headed towards the lower bound channel, I guess. Currently channel heading towards the lower bound. Fuck it, let's just say that lower bound channel, and looking for shorts. Alright, so now I have the general trend and my positioning to see what I'm looking for. So I just kind of keep that there. I go to the 1 hour just to see what's going on. And here you go, we are retesting this support. This is the week open of the beginning of the month. And right here, basically from here, I'm not really going to do anything until let's just draw this real quick. Basically, I'm not going to do anything until we have a break of structure. So either we have a break of structure here, and again, I'm going short. So if we have a bigger structure, then I would probably, if price comes back, if price goes lower as a break of structure and comes back up, then I will be looking for a short. But also, depending on how far down it goes, I would usually kind of hit my fib, put my fib, and I'll have the 79 level, 72, just 79% retracements, and this is 72% retracements, and from here I would either enter my shorts here. So like right now, there's not really much I could do because it's already low, so there's not really a high probability of making a good profit. So I need to wait for retracement, which would be either up here, depending on how far down it goes. It could be right here. Hope that made a little sense. So down. So here we are. Here we are to the point where nothing's really going on. So I guess the only thing I do usually right here is I just kind of just take notes. So present. hear my cats. Oh, my legs. Hola, Morita. Oh! Hola, ma. ¿Ya está allá? ¿Qué dice? ¿Que está caliente? ¿Qué qué? ¿Dónde estaba la puerta? Ya cuando crecen en una semana. I'm streaming on YouTube. Oh. Alright, here we are again. Let's see where we at. Oh yeah, I was just taking notes. So, what's up, kitty? Prices in the channel. 1 hour heading towards the support. 5 week open, and then the trend down is quick and consistent. Showing end of 15-minute. So usually, like if you're to be trading usually fuck, my arm is hurting. So you'd be trading on a 5-minute time frame, then you would just kind of be like, well, I don't know how you would be like on trade like you. Even though I do enjoy a 5-minute, I'm somehow reducing my stops according to the 5-minute, which is not good. So. Mainly because yeah, we have this downtrend right here. So this is being pretty consistent. So basically we're gonna wait until we have a breaker structure down. Breaker structure of this channel. So break a channel, I guess. Break a channel. It's gonna come down, come up, enter short, and see how that goes. So as you can see, I doubt that's gonna happen in the next minute or two, and the fact that we have the Fed meeting minutes at 11 a.m. There's pretty much not gonna be doing price is not gonna be doing much of anything until 11. So basically, we just have a it's from here to 11, which would be 1. Fuck. So from here to 1. Hey. So from here to 1, we're basically not going to have much of anything. And then after 1 or before, a little bit before 1 or 11 Pacific, then we should have the Fed saying some stuff and moving the price a little bit. So that's where we're at. I guess I could do like, let's see, I could do like anticipation of what's gonna happen during the Fed meeting. I don't know, man. They always say the same thing. Jobs are strong, economy's good. We don't plan on. We're gonna keep rates a little bit longer. So I guess we could make a decent of what's gonna happen if they keep rates a little bit longer. For that, I'm gonna go on to 1 hour. Another thing I like is I like the Fib extension. So I just actually grab my. Oh my god, this is just so amazing. So Fib extensions kind of just give you a some levels to where price could be extending to. So usually what you do is you just mark your top or bottom. So in this case, I mark my top. I marked the move down and then the retracement. So as you can see, I marked the top, the bottom of the retracement here, and the bottom of the move down, and then the retracement right here. And it gives me a 1 level, gives me a 1.618, gives me a 2, and a 3, and a 3 matches so close to this candle right here. And I don't know, when I just see a bunch of confluences, hey, oh yeah, Morita's playing with the Morita. I have a cat named Morita. She's orange. She's pretty cute. If you ask, I'll let you see her. But no one's asking, so you're not gonna see her. But she's playing with a. Hey, don't eat it. She's playing with one of those ear tips. Block noises what you put in your ear. You know, the orange tips. Oh shit. Have a. Oh, it's 6:30, so we gained some stock news. Here, I'll get to this in a second. I just want to check some stuff. Let's see what stocks are doing. Coinbase lower, so stuff. CoinHood is lower, so that means crypto's not acting too good right now. SPY not really doing much of anything. Netflix is crazy. Airbnb not doing much. Apple finally above 200. Tesla, SP, OG, TLT, 40. VIX. Nothing on the VIX that's interesting. Not up or down. Today's a quiet day. And I have a long option, call option on United Health Group. Yeah. I have a call option for 550. So I have an option for this thing right here, and it expires in July 18. Hey, what's up with you? My cat's been acting a little funky ever since we got little kittens in the outside. She's been doing like, I don't know what she's doing. She's like asking for attention so much. But I have this call option on UNH for 550 with a strike price of July 18. And basically what I just want to see, I just want to close the trade once this gap gets filled. Once this gap gets filled, if I have a high volatility candle, something like this, but over here, kind of just bumps up and changes the sentiment of the people, of them thinking they're like, oh shit, it's going higher. That's when I'm gonna sell my call option. But for now, I think I'm down on it, maybe 20%. Yeah, so I got it. Oh, $35. Yeah, I bought it for 102, and right now it's at 67. I'm down 35. And the lowest has gone over the week is like 0.5. If it goes lower to lowest is like 0.6 last week, 0.56. So if it goes down lower to 0.5, I might have to buy another one. Yeah, it goes down to 0.5, I'll buy another one. Probably same strike, which would be less than 2 months. I usually try to aim for 2 months in my option positions, just so I have 1 month of a delta not really fucking me, so, or screwing me over, whatever you want to call it. So that's how stocks are doing. Like I said, crypto's probably not doing too good since Coin and Hood are down. Yeah, Bitcoin not really doing much of anything. It's kind of just been inside this this pattern, which is continually just going higher. So that's good and bad. I don't know. So Link, I have Link. I like Link. I like out of all these, I kind of just like Link, ETH, Bitcoin, Ondo. I like Ondo. I mean, I just like RWAs. Right now, Ondo seems like the leader. I like RWAs, and I like Oracles, and I like ETH and Bitcoin. I don't really fuck with DEXs, so like Hype, even though Hype is doing really good, I just don't like the models. I mean, there's just too many that come out, and like Jupiter, for example, has another DEX. Uni, I know they're doing more than just DEXing, but I mean, this chart looks really good. Uni might not be a bad buy. This actually looks pretty good. Technically, this looks good too. But this looks a lot better at 13. Anyways. XRP looks fucking diabolical. Stacks. I liked Stacks at first, and then I found out they don't really settle on Bitcoin. So I'm like, I don't really fuck with it no more. Comp, then this shit looks really good. It's interesting. Damn, this shit really traded like this? What is is that? It's a 100% gain on one candle. Damn, that entry right here would have been fire. But anyways, I kind of stopped doing this high momentum type trades. I just realized I just get screwed over more than not. So yeah, so let's go back to stocks. Let's go back to Forex, what we've been talking about. Shit, where am I? Oh, yeah, it should be 1 hour. Was I talking about something? Oh yeah, I was gonna. Damn, I got distracted. I was gonna see what the Fed might be up to. Oh yeah, I remember I was gonna say that I like confluences. Is that what it says? Basically, when a lot of things line up. Like for example, here there's one fair value gap. Is this fair value gap important? I'm not sure. I just know that it was kind of like a. It was one of the point releases for this up move right here, and also we have this this candle right here. So we have support on this side. We have fair value gap here, support here, and we have the three fib extension right there. So just with that, I just like to kind of just make an oval, just saying that like, hey, I'm not sure what's gonna happen, but I know something's gonna happen around this price. Just to keep my mind ready for that. But in terms of the Fed has to break down this level. The Fed's gonna probably break down here. It might continue going lower, it might continue going higher. But if they say interest rates higher for longer. If they say higher for longer, then let's see. They say higher for longer. Yeah, I'm just guessing it's gonna go lower, but let's see how other charts are doing. So let's continue going higher. This is interesting because the DXY already broke that lower high or the higher high, which means that on this chart, this candle would have already broken this, but that hasn't happened. So there's already a what do you call that? What do you call that when you have one trend going like one trend that's going like that, and then one trend going like that? There are like not inconsistencies, but there's something going on here, and there's a word for it that I can't remember right now. But the DXY already broke a structure right here, and I kind of look for the least resistant path to where price can go. And obviously from right here, it just kind of looks like it would just continue going lower since the move higher has been so thin. Hey kitty, what's going on, Morita? What's going on? Move higher, brick a structure, SOFR has been just going sideways. Morita. SOFR been going sideways. We have liquidity sitting up here, but we also got liquidity sitting down here. So look at me fucking bearing fair value gaps on the SOFR chart. Damn, bro. Welcome to 2025. I mean, Yeah, so this goes, if SOFR goes lower, I mean, that's a daily chart. I mean, I doubt. I mean, actually, I don't doubt because look, there's not that much volume has been going on for the past 2 weeks, and you can see that volume has been going crazy for the past month. So yeah, I wouldn't be surprised if we see a big move, especially on FOMC meetings. So, shit can down, but like the thing is now is that we have either two options. Either, let's see if I could draw. Either SOFR comes down to this gap, comes down this candle, or it comes up here, fills in this liquidity right here, and fills in this gap right here. So it could come here, or it could come down here. So it could either go here, or it could either go down here. Shit. And now if it goes down, then that means the market is anticipating less interest rate cuts, which means that, so if it goes down, that means DXY will go up, which means euro will go down. Jeez, so many things going on. So SOFR goes down. Damn, this makes no sense on the 1 hour. So SOFR comes down. That means the market is anticipating less interest rate cuts. Less interest rate cuts is good for the dollar, which means that euro should be going. Less interest cuts is good for the dollar, so euro should be coming down. All right. So SOFR goes down, euro goes down. Right? No. Shit, let me write this down. I know this is so easy, but sometimes just make things complicated. So SOFR go up. SOFR going up means more interest rates, more interest rate cuts, which means more interest rate cuts means weaker dollar. Now, obviously, the meaning behind the decision for SOFR to go up or down is important too, because if it's going up because the economy is doing so good, then that's strong dollar. But if it's going up because the economy is not doing good, then it's a even weaker dollar. But in general, SOFR go up equals more interest rate cuts equals weaker dollar. SOFR go down equals less interest rate cuts. Less interest rate cuts, which equals a stronger dollar. Let me just show you what I'm writing down, so you're not just out the loop. SOFR go up equals more interest rate cuts equals weaker dollar. SOFR go down equals less interest rate cuts, stronger dollar. So SOFR go up equals DXY. So DXY is basically the dollar chart. So interest rates so equals weaker dollar. So DXY go down, and EU, which is euro dollar, weaker dollar. So EU go up. Then vice versa. SOFR go down equals DXY, which is the dollar index, go up, and EU go down because dollar is stronger. All right. So now that I got that out the way, we have. You can hear my cat in the background. She is doing something. Oh, she is cleaning herself. So once we have that out the way, we have euro. We have SOFR. you're doing two things. You can go. So we're thinking is either gonna go here or it's gonna go here. This would be a 4 interest rate. So this is basically, if it goes down here, that's a 1 interest rate cut. Damn, that'd be really interesting. And we go up here. What is that? Let's just go to. Fuck it, let's just go. Fuck it. I don't know. So we come down here. So if we go down, EU go up. No, so if we go down, EU go down. All right. So I guess in conclusion, SOFR comes down to this level. SOFR comes down to this level, somewhere between 96, below 96.1. Basically, if SOFR breaks down this break of structure, or this support continues going lower down to this zone, then we should be expecting Euro to hit this 3 Fib retracement somewhere down here. So go down to the lower bound of the channel and somewhere come down here. So this is where I kind of expect. It's a little bit too much. Yeah, it's a big move. 50 pips is not much actually. So yeah, so come down here. And now if SOFR goes up, then let's see, if SOFR goes up, then what am I thinking is gonna happen? So I'm thinking, when did the week open? I never even marked that down. Let's do that. Fuck, it's already late. I need to get ready for work. Okay. So week open. That'll be Monday. The week opened here. So let's do this. Right. Damn. Did this week open have the same week open as 428? So this week open yep. Damn. So week open here, week close, week open. Okay, interesting. Damn, so this level has been, what was this? Like 135. Like around 1.135. Price has been reacting ever since freaking beginning of April. So it's good to know. And that's above the 79%. Let's see if I go here. Alright, so I'm gonna just press my thing down here. Could go higher, so I could put it here, I could put it here, I could put it up here. These are kind of the decisions you make on your own, on your intuition. Technically, the best thing would probably be to put it up here and expect price to go back to 79 and go short here. But since 135 is a pretty important level down here, and plus because we had price breaker structure right here and we had a retracement back to the channel up here, and 79% is right there, I'm kind of just going to say that either. So if SOFR goes down, it goes here. If SOFR goes up, then I'm going to just say it goes. SOFR goes up, I'm going to just say it's going to go somewhere up here. So bam. And if it goes up here, then I would go short, but it's out of my time zone, so out of my entry time frame, so I'm not going to make anything until the morning. So that's it for today. Yeah, I'm just kind of on here until 7. I have to get ready for work and go to work, do the same thing tomorrow. So yeah, so let's just see how this plays out. I'll probably review this with you guys tomorrow, see how everything, I guess, played out. So yeah, that's really it for today. Alright. My one watching, which is me. I'll see you some other day.